There's a question I've been getting a lot lately, especially from folks in their 60s who are either retired or getting close. Should I really still be in bonds? They're hearing headlines about inflation, they're seeing their old 60-40 portfolio underperform, and they're wondering, has this whole strategy stopped working? My name is Chris McClure, and for the past 30 years, I've helped families with substantial portfolios answer questions exactly like this. Not with theory, but with strategy that actually works through different market conditions. You see, bonds aren't bad, but the way most people use them, that's where the problem starts. I have this client, David and Linda. They had about $4.2 million across retirement accounts and a brokerage account. They had no debt. They had paid off their mortgages. They were 62 and 64, and they were ready to step back. They were ready to retire. They wanted to step back from work and travel a bit, maybe with their grandkids, and enjoy what they built. They met with one advisor who told them to play it safe, go 70% bonds, 30% equity. So that's what they did. And for a few months, it felt like the right move until inflation spiked. Their income was flat, the value of their bond portfolio dropped, and the purchasing power that they thought they protected started slipping away. They thought they were safe, and it turned out they weren't. They were earning 3%, but inflation was running at 6%. They were losing ground without realizing it. When people ask, should I still be in bonds after 60? What they really mean is, how do I make sure my money's safe but still growing? The answer really has less to do with bonds and more to do with how the structure of your overall plan works. We set aside the first 2 years of projected spending for David and Linda. It was around $180,000 in cash, basically. High-grade bonds, CDs, some treasury bills, nothing fancy, just safe and predictable. That gave them confidence they wouldn't need to sell anything in a downturn. And we positioned the next 5 to 7 years or so in a diversified, blended, quality dividend-paying portfolio. Then we positioned the next 5 to 7 years in a diversified blend of quality dividend-paying stocks, some exchange-traded funds, and then also some balanced funds. That allowed them to participate in growth, but it really focused on stability and income generation for them. They could sleep well at night knowing they had plenty of income. And we carved out a smaller piece, around 15% or so, for long-term growth. They ended up owning some real estate, a few alternatives, and they had broader stock market exposure. They had upside potential, but it was controlled. Well, the result is they had a plan. They had a plan they could stick to that in 2022 when the market dropped. If you remember in 2022, stocks were down 20%, bonds were down 20%, and cash was basically zero, so there was nowhere to hide. They were able to keep invested because we had planned. In 2023, when inflation stuck around, and in 2024, when their friends started second-guessing their allocations again, David told me something really interesting at that time. He said, I used to think bonds were the safe choice. Now I realize the safe choice is having a plan that I don't have to second-guess every time the market moves. You see, it's not about chasing returns, it's about building your portfolio that lets you sleep at night without sacrificing your purchasing power. And for a lot of families that I work with, that means holding some bonds, but not relying on them to do a job that they're not really built to do. We want to think in terms of time horizons instead of asset classes. We want to have different tools for different jobs, not just defaulting to what worked 20 years ago. So if you're within 5, say 10 years from retirement, or maybe you're already even retired, and you're sitting on a portfolio you're not quite sure what to do with, there's a link below that you can schedule a call. I think you'll walk away with real insight based on your actual situation, and it would be fun to chat. I really love making these videos, and I hope you'll join me on the next one.